And it is time for the Word on Wall Street. Joining me right now, the Bahnsen Group CEO, Managing Partner David Bahnsen, Walser Wealth Management President Rebecca Walser, and Optimal Capital Director of Strategy and Market Analyst Francis Newton-Stacy. Great to see everybody this morning. Thank you for being here. First up, got a little bit of merger mania underway, huh? Futures pointing to another day of gains after yesterday's rally was driven by a number of deals. You had positive vaccine news also driving markets, with Pfizer indicating it could present key data to regulators next month. Rebecca, what's your take on the mergers? What does this tell us about the economy and business today?
Yeah, I mean, I think it shows that businesses still think, Maria, that there's some opportunity out there and maybe even an opportunity to get some things on a discount. And certainly there's a race to this vaccine. So we have all kinds of AstraZeneca, Pfizer. We have all kinds of it's actually a capitalism at work. I love to see it. It's innovation at work with a race on top of that for the human race, right? So that's exciting. But yeah, I mean, Oracle potentially with TikTok and NVIDIA with SoftBank's actual ARM holdings were really making news yesterday on the semiconductor space and the front end of TikTok, which Oracle's a really big surprise, where we haven't seen them ever want to be sort of on the front end on the social media side. And so that's really an interesting fit, unusual, and it's really going to have to pass through a lot of, obviously, steps to get to where it needs to go.
Yeah, usually when I see a spate of mergers, I feel like companies are using lower interest rates, taking advantage of that, but also doing things that may have been on the shelf, now coming off the shelf, indications that business is back. Federal Reserve, of course, is in focus this morning. Central bank officials are meeting today and tomorrow after deciding last month to allow inflation to rise above 2%. This as stimulus efforts from Congress remain stalled. Francis, your outlook here, we know that Jay Powell has already told us rates are going to be near 0% for the next couple of years until 2024.
Yes, I think that the headwind that's coming for the Fed is they have been promoting the fiscal stimulus, which, as we know, is in gridlock in Washington. But really, it's like a swimming pool. The Fed and the initial fiscal response to the coronavirus filled that swimming pool, but the record amount of debt in circulation is always a drain. So you don't want to turn those faucets off. And so with fiscal kind of, in a gridlock, with the Fed not purchasing assets at the rate that they were, and with credit softening, both with bank tightening and credit cards and consumers, you just have to make sure that that pool is filled. That and credit markets, however many of those mortgages that are in forbearance go into default when the forbearance period is over, really determines whether we're heading for a recovery that's really sustainable or if we have some deflationary risk on the horizon.
Well, the reopening of the economy should give us some indication of where we are. August retail sales are due out tomorrow morning. They're expected to be up 1%. But as fall rolls around, holiday shopping expectations are hanging in the balance. Deloitte is seeing a 1 to 1.5% gain in sales from November to January. And Citi is reportedly moving forward with layoffs after pushing pause during the pandemic. So you've got that as well, David. The unemployment situation is still somewhat murky. What's your take on the backdrop?
Well, I think that this obsession that so many have on the retail numbers and the consumer activity always misses the boat. Of course, I'm a little biased as a diehard supply sider, but we need the production side of the economy to be moving. When there's a lot of production, you get the ability for people to consume more, but they're also producing the things that people will, in fact, be consuming. So I think that the retail number is backward-looking, productivity is forward-looking. We've frankly seen a lot more small business optimism, manufacturing pickup than I would have expected by now. What we need to see this economic recovery get more legs is for companies to reopen for business. Whether it's here in New York City, Maria, or elsewhere around the country, it is time for companies to be bringing their employees back to the office and allowing for all of the sort of trickle-down effect from that to take place.
Yes.
Yeah.
Yes.
You want to be owning stocks going into the rest of the year? You all agree. So you want to own stocks going into this?
Absolutely.
Okay. All right. Great to see you all. David Bahnsen, Rebecca Walser, and Francis Newton-Stacy. Thank you so much. Great insights as always. Coming up, U.S.-China tensions.